Welcome back to The Contrarian, everybody. I'm Logan. Today I'll be talking about a recent article that came out a couple of days ago on Bloomberg, talking about a recent trial that the Fed did on their CBDC program, which right now they are calling FedNow. And they've called it this for the last year and a half or so since it officially came out that the Fed was developing a CBDC, or central bank digital currency. And they did do a trial run late last year in kind of October, November 2022, but they just did a larger one for 3 months, it sounds like, and that just completed. So today I'll take a deep dive through this, really talking about how this is ultimately building up to the Fed officially launching a CBDC, or a digitized dollar, and also the implications of this. So basically, the article's title is New York Fed says months-long test on digital dollar shows speed advantage. A division of the New York Fed concludes a digital dollar test with banks. The test was conducive to further exploring tokenized deposits. And we'll get into what tokenized deposits could be. It's not the same as FedNow, but it's something being talked about more right now. But basically, a months-long test with some of the world's largest banks found that digital dollars could be an effective way to improve domestic and cross-border payments, according to a unit of the Federal Reserve out of New York. So the Fed's Innovation Center spent 12 weeks testing a technology known as a regulated liability network, which allows banks to simulate issuing digital money representing their customers' own funds before settling through central bank reserves on a distributed ledger. The test proved to the Fed that these so-called digital dollars have the ability to improve wholesale payments, and that the use of the ledger didn't alter the legal treatment of the deposits. So here is kind of the selling point that Bloomberg, or that the Fed is really pushing for the digitization of money. They're saying that it doesn't go against legislation, and it's perfectly legal, they're saying, but they're also saying that it improves the payments, the ability for payments to go through smoothly and on a timely basis. And that makes sense. It would make sense that it would speed up something like that. And yes, from a central banking perspective, the proof of concept was conducive to exploring tokenized regulated deposits and understanding the potential functional benefits of central bank and commercial bank digital money operating together on a shared ledger. So the difference between a CBDC and a tokenized deposit is that a tokenized deposit would be treated more like a stable coin. It would be like buying a Tether or another stable coin right now, but Tether is kind of the one that's still existing right now. But basically, you'd trade your physical dollars, your dollars right now, for a stable coin, and then you use that to buy other cryptocurrencies. That's in the crypto world. So the translation from this to the regulated banking world is you could buy a JP Morgan coin or a Citigroup coin, and then from there you could go into these other perhaps central bank digital currencies that develop later. So surprisingly, many of the biggest banks in existence participated in this, like they did last fall. Citigroup, Wells Fargo, and others, a lot of others by the way, joined in the Fed's test to see whether the new system could solve problems, including the movement of cash across borders. The New York Innovation Center said the project doesn't reflect the views of the Federal Reserve Board. So they're trying to keep the Fed out of this. The Fed, in other words, didn't say anything regarding this. But they're also saying that the project concluded that it didn't identify any insuperable legal impediments under existing U.S. laws that would prevent the establishment of such a digital dollar. Still, further engagement with regulators would be required before reaching a final conclusion. So right now, they're trying to, when I say they, it would be the Fed and other major banks, so JP Morgan, Goldman Sachs, Wells Fargo, etc. They're trying to kind of imply that just digitizing the dollar doesn't go against any sort of, say, constitutional or or other laws, regardless. But that's a very interesting question that brings up the whole topic of money altogether. And it does tend to go, or people have oftentimes said that creating a CBDC would go against the law of requiring just a physical dollar, but somehow they're able to get around this requirement of the dollar physically existing in a person's wallet, in their, at their house, whatever, to where now it's a digitized dollar, something that's in their digitized account, their digital account. And yeah, to some extent, the banking system does already function like this. Most of, probably all of our net worths are digitized. They're not physical gold, they're not physical dollars, etc. But that does bring up an interesting topic of trying to get rid of cash, which is kind of the end goal of CBDCs. That is the extreme that they go to very quickly, of destroying physical cash, and all of a sudden you introduce a lot of controls that can usher in a lot more authoritarian type of banking policies. But this article does conclude with saying that a central bank digital currency is far from reality in the US. And this is true so far. And yes, FedNow might not be the end goal of what the Fed is going for in a CBDC, but it is nevertheless a big step in that direction. And that's a concerning step for maybe individuals like myself and many others who've talked about the implications of a CBDC, the kinds of very easily accessible tools that they give to regulators, to government officials, that just nobody voted on, no discussion was ever held regarding these kinds of policies. Suddenly it could usher in an era of very authoritarian type of policies without anybody really agreeing to it or even having discussed it at all. So that being said, this is a recent development in regards to the FedNow CBDC, and it does show that they're moving towards launching it. I don't know if it will actually launch in July, which is when they initially said they would launch the FedNow program, but it might launch in a limited manner, say between these large banks and the Fed, and then from there it could develop from there. But we will need to really wait and see what happens with the whole central bank digital currency world and that genre in general. A lot of central banks are much further than the Fed. They already have their CBDCs going well, and a lot of controls along with them. Of course, China is a great example of that, and I think most of us would agree we don't want to go that far. So it will be interesting to see where the FedNow program goes. Individual states like Florida, Texas, they tried to impose state legislation banning CBDCs. We will have to see how those laws kind of interact with the federal laws. Can states individually ban the CBDC? That's a whole another discussion altogether, but we will need to really wait and see what happens with all of this. So all this being said, if you like this video, give it a thumbs up. If you want to hear more, just consider subscribing to this channel, and I hope to see all of you again at some point.